The AI revolution is about to hit a massive physical wall. While everyone is chasing semiconductor chips, AI software is actually starving for energy. If you feel like you missed the NVIDIA boat, listen closely. I'm breaking down why nuclear will be phase 2 of the AI boom. Welcome to Invest with Teddy, the channel where I break down stocks, investing, and trading to help you make better financial decisions. In this video, we'll start with how nuclear energy got here. We'll look at how it has transformed into a $30 trillion national security priority. I'll quickly summarize how nuclear energy is made, the big players involved, and I'll drop where the real bottleneck lies. Then we'll get into the billion-dollar contracts from companies like Meta and Microsoft that prove this nuclear supercycle is actually happening. After that, we'll put it all in perspective. I'll show you the most important nuclear stocks to buy and how I plan to trade this supercycle without getting caught in the hype. You've probably heard about AI's massive hunger for power, watching the vertical climb of every stock price related to AI in the past few years. Lately, however, the narrative is changing. The conversation is shifting away from how many NVIDIA GPU chips a company can buy. It's moving toward a much more primal question. Where is the power going to come from? You are witnessing the moment the AI revolution hits a power wall. This is a hard physics problem that even the best AI stocks cannot solve with code alone. For example, when you perform a standard Google search, you're using about 0.3 watt-hours of electricity. But a generative AI prompt pulls 2.9 watt-hours. That's a 10 times increase in AI energy demand for every single AI prompt. As you scale this across billions of users, the math becomes terrifying. By 2030, data centers will move from consuming 3% of the US grid to nearly 10%. We are headed toward a global AI power crisis. Looking out 10 years to 2035, AI will require so much power that the aging grid will be physically incapable of supporting it. You're looking at a future where compute is no longer limited by code, but by the lack of electricity supply. So why nuclear over other energy sources? We've been told for years that wind and solar are the future of clean energy. While they're part of the solution, they have a fatal flaw for AI. They take long naps. Solar and wind only provide power for about 6 to 8 hours a day at best. That might work for a toaster, but it doesn't work for top AI companies like OpenAI and Anthropic, which need to run 24/7. In contrast, nuclear energy is the overtime specialist. It has the capacity to run for at least 22 hours every single day. Overall, it's the only carbon-free power source that stays awake for nearly 24 hours a day. But with all this need for constant power, why not just stick to natural gas? Here's why natural gas can't compete. It lacks the efficiency this revolution requires. Think about the physical scale. One single uranium pellet, which is about the size of the tip of your pinky finger, contains as much energy as 3 barrels of oil or an entire ton of coal. To get that same power from natural gas, you'd need 17,000 cubic feet of it. That's enough gas to fill an entire 3-bedroom house from floor to ceiling. Furthermore, big tech companies have net zero carbon goals. They can't burn an entire house worth of gas and hit those goals at the same time. While clean energy stocks are part of the mix, nuclear is the only solution that is both carbon-free and constant. So if nuclear is the perfect answer, why haven't we just built more reactors? Well, the way we used to build them is broken. Here's the traditional nuclear reactor problem. Traditional reactors were built like mainframes, those giant old-school computers. They were massive, custom-built concrete domes that took up to 20 years to permit and build. Big tech needs power now, not in 20 years. What about restarting old reactors? This is known as the zombie approach, where a shuttered plant is renovated to turn the lights back on. But there are two massive problems with this strategy. First, it still takes serious time. You can't just flip a switch. Bringing a dormant nuclear plant back online requires years of intense maintenance, retrofitting, and strict regulatory approvals. Second, these old reactors have a hard ceiling. A traditional reactor's core is a fixed size, meaning it can only ever output its original licensed capacity. In other words, you can't just add more capacity to an existing reactor to get more power if it's already full. If an AI data center grows and needs more juice, the tech company is out of luck. they would have to wait another 20 years to build an entirely new plant from scratch. To save the AI boom, the industry had to stop treating nuclear power like a 20-year construction project and start treating it like a scalable tech product. Which brings us to the SMR revolution. This is where small modular reactors, or SMRs, become the game changer. These are the portable nuclear batteries for data centers we've been waiting for. If traditional reactors are giant old-school computers, SMRs are the next-generation laptops in the nuclear world. They allow the entire build process to happen in a much smaller, factory-built package. Instead of the huge custom-built concrete domes of the past that took decades to build, SMRs allow the reactor itself to be manufactured on an assembly line. They are then shipped on a truck like any other piece of high-tech hardware and plugged directly into a single data center. But here's the catch. You can't power the high-performance laptops of the nuclear energy world the same way as traditional reactors. AI-ready SMRs need a more highly refined fuel called HALEU, which leads us to where the real nuclear bottleneck in the industry is. You see, existing refineries can't just switch to producing HALEU fuel. They require a complete overhaul and the rare government licenses to do so. In fact, there is only one company in the US currently licensed to produce this precious fuel at a commercial scale. And it's public. I'll talk about that specific stock later in the video. Now that you understand the nuclear investing angle, it's best to know how nuclear energy is made and the groups involved. But don't worry, this part will be quick. I'll explain in 3 minutes in 5 simple stages. The first stage starts with mining. Mining companies pull uranium ore from the ground and turn it into powder. At this stage, it's just a rock, mostly useless for energy. The miners own this raw inventory and sell it to the refiners and enrichers. Next is the most critical step, enrichment and refining. These companies take that uranium powder, turn it into a gas, and through a process, concentrate its power. This stage is where that precious HALEU fuel is created. And there's only one US company licensed to create high-grade HALEU fuel for SMRs, but we'll talk about that later. Once the gas is refined, it moves to the fabricators. Fabricators turn that high-energy gas into solid ceramic pellets and load them into what's called fuel rods. Think of these rods as the actual fuel tanks of the nuclear industry. They are now sealed, stabilized, and ready to be shipped to the power reactor site. This is the stage where the physical reactors come to life. Traditional reactors are built from scratch on site as one giant facility, taking up to 20 years. The players involved here are basically mega construction companies. Think of hundreds of workers pouring concrete and laying steel just to build a single power plant. On the other hand, next-gen SMRs flip the script because they are manufactured on an assembly line. The players here are high-tech manufacturers building these reactors the exact same way Ford or Tesla builds a car. Now, how do these reactors actually reach big tech companies like Meta and Microsoft? For traditional reactors, they're static. Big tech must come to the plant and build data centers right next door. For SMRs, the factory simply ships the reactor to the customer by truck or rail car. It arrives at the data center and is plugged in directly to the servers. What about operating the machines? In either case, the process is exactly the same. Tech companies don't run these machines themselves. They outsource the job. They hire professional utility companies to manage the daily operations. Think of the utility companies as the flight crew. They're highly trained pilots, keeping things running safely 24/7. This complete journey from pulling a rock out of the ground to the utility companies running the control room is the exact nuclear value chain you are about to invest in. Now, the need for a new energy source is gravy, but for investors and traders, what really counts is commercialization. In other words, what can actually generate revenue for the nuclear industry, and when? The answer lies in these latest milestones, which are pushing the industry closer and closer to sustainable revenue. You are now seeing the government step onto the field as a teammate and a shareholder. The current admin is moving to an Intel-style model, providing massive capital injections in exchange for equity. The catalyst started in August of 2024, when the US officially banned Russian uranium imports. Russia used to dominate 40% of the global enrichment market. This ban created a hole in the US's energy grid that can only be filled by onshoring production to American soil. Then, in January of 2026, the Department of Energy dropped a $2.7 billion funding hammer. They are essentially acting as the venture capitalist for the nuclear renaissance. But what exactly are they trying to make happen? The government's goal is to build a domestic HALEU fuel supply chain from scratch. They are funding the construction on American soil so that the US can officially divorce itself from the 40% monopoly Russia currently holds over the fuel market. Hyperscaler tech companies are shifting from being customers of the grid to becoming the primary financiers of the industry. Amazon dropped $650 million on a nuclear-powered data center in March of 2024. Then a few months later, Microsoft signed a $16 billion deal to restart 3 Mile Island. Google followed shortly after signing the world's first corporate agreement to buy power from a fleet of SMRs from Kairos Power. Amazon doubled down days later by investing another $500 million in SMR developer X Energy. Fast forward to January of 2026, Meta partnered with Oklo to build a massive $12 billion private nuclear network. This is a fleet of SMRs that will act as private plugs for Meta's AI clusters. And then in May of 2026, IBM partnered with the US government on a $1 billion project called Anduril to build a domestic quantum nuclear chip foundry. These companies know that whoever first secures enough nuclear power will help them win the AI race. Now, with all this said, let's break down the best nuclear energy stocks to buy. I spend a massive amount of hours every week digging through SEC filings, news articles, and macro reports. My goal is to do the heavy lifting so you don't have to pay the costly lessons I did over the last 10 plus years. If you're finding this valuable, it would mean a lot to me if you took a second to like this video and subscribe. It's the best way to support the channel so I can keep bringing you the data. Now let's get back to the best nuclear and uranium stocks to buy. How do you actually take part in the nuclear energy boom as an investor and trader? You can't just treat every nuclear company the same. To target the winners, you have to know which stocks to own. Here are the best nuclear and uranium stocks to buy today. Your foundation starts with the miners who own the uranium ore. They own the raw material that both the traditional reactors and the new SMRs require to function. When the spot price of uranium moves, these are the first stocks to react. Cameco CCJ is the Nvidia of the sector, the blue chip provider every institution buys first. Also, watch Uranium Energy, UEC for Domestic United States Growth and Energy Fuels, UUUU, which owns the only conventional mill in the country. You should also keep an eye on Denison Mines, DNN, which is advancing low-cost mining methods in Canada that could lead to industry-leading profit margins. When it comes to refining HALEU fuel, the type that next-gen SMRs need, this layer is the most important. Centrus Energy, LEU, is the company to watch here. They hold the only license in the US to produce this specific high-grade fuel at a commercial scale. To replace the massive machines they already have would cost a competitor up to $14 billion. Yet the company is valued at a tiny fraction of that today. Also, keep an eye on ASP Isotopes, ASPI, which uses quantum enrichment tech to produce fuel more efficiently. Then there's BWX Technologies, BWXT. This one is operating a secret pharma business model hidden within an energy company with potential profit margins thousands of times higher than electricity. In Layer 3, these are the companies that are building SMRs, those portable nuclear batteries for data centers. Oklo, OKLO, is the leader in partnerships here, backed by OpenAI founder Sam Altman. They are building an SMR energy source, so big tech doesn't have to wait for the city to upgrade the power grid. You also have NuScale Power, SMR, which holds the first ever approved design. For the most micro of SMR plays, watch Nano Nuclear, NNE, which is working on reactors small enough to fit on a truck. Finally, don't ignore GE Vernova, GEV, which is integrating SMR technology into its global service fleet. If you want stable cash flow, look at the utilities owning and operating the fleets. Constellation Energy, CEG, is the king, currently restarting reactors for Microsoft. Vistra, VST, is another heavy hitter with massive data center contracts from Meta. Duke Energy, DUK, is a staple. These companies turn uranium into the physical cash flow that fuels the entire industry. Maybe you see the opportunity, but you don't want to gamble on just one nuclear energy stock. If you aren't sure which specific stock will win the race, you can own the industry through ETF funds. The Global X Uranium Fund, URA, gives you a broad mix of everything we've talked about, from the miners to the tech innovators. This is the best ticker if you want deep liquidity and general exposure to the AI nuclear energy boom. If you only want a pure play on the miners, look at the Sprott Uranium Miners Fund, URNM. When the price of uranium goes up, this ticker is usually the first to react. If you're more interested in the new technology and the manufacturing side, watch the Range Nuclear Renaissance Index, NUKZ. This fund focuses on the next-gen companies and the manufacturers building the actual hardware for advanced reactors. For more stable income dividend stocks, there is the VanEck Uranium and Nuclear Energy Fund, NLR. This fund focuses heavily on the operators, the big utility companies that actually run the plants and pay steady dividends. Owning the basket is a professional way to manage your risk. It allows you to profit from the entire theme without being wiped out if one individual company hits a snag. Understanding which stocks to keep on your radar is great, but as a trader and investor, you need to recognize the potential catalysts that could reprice these companies almost overnight. Here are the macro and micro catalysts to watch. Watch for the domino effect of big tech FOMO. Early movers like Microsoft and Meta are just the first dominoes. Hyperscalers like Apple or Oracle may soon be forced into a panic buy. Securing a nuclear reactor is now a competitive requirement for tech firms. Watch for more nuclear announcements by big tech that will reprice the entire industry. The ultimate spark for the tech subsector is the first of a kind, or FOAK milestone. The market is currently waiting for proof that a next-gen reactor can actually be plugged into a data center and work. The moment the first modular reactor, likely from Oklo or NuScale, hits its final testing phase or connects to its first customer, the pre-revenue discount will disappear. That event will likely reprice the entire industry overnight as Wall Street realizes the technology is officially de-risked. You need to watch for the speed of government approvals. Historically, getting a permit took 7 to 10 years. In May of 2026, the government cleared a major project in Texas in under 12 months. Furthermore, the Department of Energy continues to hand out billion-dollar loans to bring plants back to life. Watch the uranium spot price. Historically, if the uranium spot price stays below $90, it's too expensive to build new mines. But with the world facing a structural shortage every year, analysts forecast prices will reach $120 to $150 in 2027. When that spot price moves, mining stocks tend to explode. Use the Sprott Physical Uranium Trust weekly updates as your real-time scoreboard. Watch for zombie plant announcements. This is when a company decides to bring a closed-down nuclear plant back to life. Restarting an old plant is the fastest way to get more power to the grid because the buildings are already there. Every time a new restart is announced, it acts as a major spark for that company's stock. These restarts are the immediate cash flow bridge while we wait for the SMRs to finish their factory runs. Watch for more government investments and loans. Beyond the billions already on the table, watch for more low-interest loans from the Department of Energy. They recently handed out a $1.5 billion loan to bring one zombie plant back to life, and they still have over $200 billion in their loan pot, specifically for clean energy infrastructure. Every time a new loan is announced, the government is essentially taking the financial risk off the table for the company, and for you as an investor. Now, should you invest in AI's next nuclear phase? The adoption of nuclear energy is a potential market shift that happens once in a generation. By 2040, global demand is projected to reach 150,000 tons of uranium just to keep the servers humming. That is a literal doubling of global consumption today. My personal strategy remains simple. I'm waiting for at least 10 to 15% breathers to build my positions. Knowing the sector is only half the job. Timing the entry is the other. To time my actual entries, I'm actively observing the technical charts for both the nuclear sector and the overall broader market. I want to see momentum align before I consider holding. When it comes to valuations, you have to be careful. Since many of these advanced SMR companies are pre-revenue, traditional P/E ratios are completely useless. Instead, I'm assessing their total addressable market and pricing them using enterprise value to sales metrics. Beyond the math, I'm heavily weighing their current partnerships, the institutional authority of their backers, and exactly how close the company is to actual commercialization. If you want to see exactly how I'm navigating this rotation in real time, stay tuned for more updates. I'm working hard daily to provide you with the best investment ideas and analysis, so if you found this research helpful, please like and subscribe to stay ahead of the curve. Otherwise, stay tuned for more daily stock ideas and tips.